Full disclosure, we are investors in Angellist. It's not at all overvalued. It's really great. If anybody wants to throw some more money at Naval, who in the audience, please? I think it's probably undervalued at $2 or $3 billion right now.
We're not at that valuation.
Okay, well, whatever. So what's happening on Angellist? Do you have any stats? Well, first of all, bubble heat index. Where are we?
Oof. I want to give a nuanced answer.
Oh, yeah.
I know the nuance will be lost. I know the number will be cheated. I'll give it an 8.
8.
And I think it's a global liquidity bubble. I don't think it's local or constant.
Okay.
It does concentrate towards us because people are looking for risk assets.
Right.
But that said, the tech industry is going through a marvelous phase where we are now attacking every industry, reaching every consumer or user on the planet. And
half of them, anyway.
Yeah, or half of them, soon to be all of them. And it's really the story of human productivity growth and GDP growth comes from technology.
Okay.
So I don't think Silicon Valley is going to go away.
That was cheerleading. Did you hear it?
Or take a huge hit. I think
we're going to change the world, create jobs.
Well, and it's incredible what's going on in China and India and
Yes.
internationally in terms of technology growth and adoption. So I think overall that is all healthy and positive. I just think that many of the central banks are still printing huge amounts of money. That money's trying to find a home and a return.
Okay,
and
that's not a tech bubble.
No, it's a global liquidity bubble.
Okay.
Whoa. All right.
Yeah.
Well, yeah, the heat just went up. So I'd give it an 8, but I don't think it's concentrated with us. Unfortunately, I think every asset class is vulnerable right now to a big downturn.
Okay, but then we don't have to outrun the bear. We just have to outrun the other asset classes. Are we better or worse?
Maybe the bear eats all of us.
Uh-oh. That's not good. How do I hedge venture capital?
You don't.
Okay. All right, with that bubbly sentiment, 8. Okay, 8. Going up or going down?
The trend on these things is they go up till they go down suddenly.
Okay.
Yeah, it's the nature of the beast.
All right, you got 2 more notches before it gets a little too...
It's basically a one-way ratchet.
Don't use that word. All right, so how's Angellist doing, and what's latest stats for you?
We're doing our thing. We're still doing syndicates with the online fundraising, probably now at around 16, 15 million a month moved online.
Okay. That's through syndicates or everything?
Through syndicates.
Through syndicates,
yeah.
Okay.
And it's about 30 to 40 companies getting financed every month online.
Okay. So that's effectively 200 million annual, roughly.
Yeah, that's right.
That's the size of a pretty decent venture capital fund.
It's the equivalent of about an 800 million to $1 billion VC fund,
All right.
but concentrated entirely on seed investing.
Should any of us be worried? Anybody in the audience?
I think everyone should be worried about everything. Generalized fears are always around.
I always ask you, are you displacing venture capital or are you complementing venture capital?
At least so far, we're creating a lot more companies at the seed level for them to pick from later.
So you're creating the Series A crunch.
There's too few at the A stage. I mean, but the cost of building a startup has gone down, so the number of startups has gone up, so the number of investors must go up.
Okay.
That's just basic balancing the equation.
Do you think the quality of the talent is going up? Do you think the material we're investing in is better, worse, same?
It's really hard to say. I mean, I would say, like always, it's very distributed. There's good talent, there's bad talent.
Okay.
But overall, I think what's happening is a lot more people are getting into technology.
Right.
There's a lot more people taking coding lessons. There's a lot of people coming out of school with technical degrees.
Okay.
And Y Combinator, 500 startups were early magnets for that. But I think now the entire
But all the rest of those
ecosystem
guys
is a
sucked.
magnet.
It's just us.
Yeah. But now it's just a huge magnet. Anyone who has a tech degree is headed towards a tech center and is probably starting a startup rather than joining a big company.
Okay. I believe that, yeah. So you guys are doing a lot of things other than just syndicates.
Yeah, the talent side is actually bigger for us right now. So we have
Explain what is talent for you.
Yeah, so we run this little Tinder-style matching service. It's free and it's open.
Tinder? What?
Yeah, where companies can meet candidates and candidates can meet investors. So there we do introductions, mutual introductions.
But these are founders of companies.
Founders of companies reaching out to engineers, designers, marketers, salespeople. So we're now we have about 9,000 companies recruiting on there pretty actively.
Okay, that's a lot.
We have about 180,000, 190,000 candidates.
How many?
Yeah, it's a big pool. And
over 100,000, you just said.
Yes. All across the board.
How many swipe rights? Is that it?
It's mutual.
I'm kind of clueless about Tinder.
Sure,
I don't know about the rest of you. I'm sure you're all on Tinder.
Yeah. It's about, I think the last week was 11,000 mutual introductions.
You're doing over 10,000 introductions
every week.
a week.
Yeah, between candidates and startups.
I think a lot of recruiters in the room should be nervous.
Yeah, it's probably around 200 hires a week right now being placed
Okay.
through Angellist Talent.
But you're not charging for monetizing for this? Why not?
We played with some monetization on the margin. It's not a priority.
Okay.
Hey, it's a bubble. Why not?
Okay then. Interesting. Does that make you a competitor to LinkedIn?
LinkedIn seems to have a very different model. First of all, LinkedIn serves
That was
the
yes. Did you hear
Yeah.
that? That was
Yeah.
yes.
LinkedIn serves the entire universe, not just startups. And they have a recruiter-based model.
Okay.
And they kind of work more with bigger companies. We're more with like small startups, 1 to 10 people, hiring their first few engineers, hiring their first few designers. Sort of after your personal network taps out. That's where we come in.
I think at the NVCA event recently, you mentioned that you haven't figured it all out yet, and you're still experimenting.
I'll probably always give that answer.
Yeah, I know that. But syndicates is working. You have a model there you're comfortable with?
Yes, although we rolled out this thing called funded backers where people put money in the cloud
Okay.
and have a 5-day opt-out. So
Got
it
it.
helps us do much faster closings.
So you're giving additional options for people to raise money, but syndicates is still primary vehicle?
Yeah, we're also now doing secondaries. We're trialing powering funds. So we're
Secondaries.
we're playing around with a lot of things. We're doing a lot of pro-ratas. A bunch of VCs have started using syndicates to do private pro-ratas with their LPs.
Okay.
So later stage deals where
So
they
that
have more
sounds
pro-ratas they
like
can fill.
More of a second market type of platform.
Yeah, I don't really draw analogies. I think it's more just bringing more of the venture capital investing process online, making it efficient, smoother, more liquid.
So to the extent that you're providing some form of liquidity there, would that be a service you charge for or not?
Yeah, we'll figure it out.
This is a cagey bastard up here. He won't answer these questions.
No, I honestly don't know. If anybody wants to pay me, they can. I'll put up a Bitcoin address.
Okay. I know you guys have been expanding a little bit internationally. You have UK up and
Yeah,
running?
we have a person in the UK. We have one
Okay.
person in Berlin.
Right. Yes, I know that person.
Yeah, we have 4 people in New York, if that counts as international.
Okay.
And we're trying to get regulatory clearance in Canada, Australia, a few other places.
Okay. Any other place in Asia yet?
Asia is tough.
Yeah.
Yeah, it's just different.
I hear there's a lot of people in Asia.
Yeah, I hear that too. I've been to Asia.
Yeah. Yes, indeed,
Well,
we have.
like China is really interesting. What's going on there seems very intense and very large.
That
and very active.
seems extremely bubbly right now. Like, definitely long-term bullish on China, but crazy.
I was surprised to find out that seed valuations, and this is total hearsay, rumor, innuendo. I haven't seen it myself, but at least the impression I got, and you can maybe confirm this, is that pre-money valuations for startups, raw startups in China, are considerably higher right now
Much
than they
higher.
are in the U.S. Yeah.
Yes. Yeah, Ray, if she's in the audience somewhere, can attest to that.
Yeah, we're becoming the poorer cousin. They seem to be going through their version of
It's
1999.
feels like
plus
late 90s.
2014 all rolled into one.
Yeah. Well, there's a ton of opportunity and
Yeah,
amazing
2014 in the
amount of
sense
folks
that there is a real opportunity, but 1999 that there's incredible momentum too.
Good time to raise money in China, perhaps. We'll see about deploying.
Yeah, I think the part of the opportunity is normally, if you look at something like the oil market, it's a global market. You can't have a sustained higher price in one area than another. Obviously, startups and private
you don't think
investing.
so?
Well, startups and investing don't work that way because you can have very local, different prices. But I think even that's going to start changing.
I would think that Chinese investors might start looking to place money in other markets, but that's still mostly been big folks, not individuals as much.
It's not. There's a lot of friction in the process. That's right.
But that might change a lot. There's definitely lots of other Chinese investments in real estate and lots of kids who are going to school over here, even at grade school levels.
Yeah, I think the tough part for a lot of people is that a lot of the wealth creation is now moving to private markets.
Yeah.
By the time it gets public, because no one wants to go public with Starbucks, a lot of the value creation has already been done. So how do you give people access to that wealth creation at the private level?
So what do you think about that? I mean, we've had a lot of conversations even last year. I think Scott Cooper and Mark Suster talked about that. The late stage part of the market has been moving more private. Companies could have gone public now are remaining private for many years.
Yeah, and most good companies don't want to go public.
Right.
Especially in the tech industry, you're always under pressure. You're always being attacked by new
Well,
entrants. new
assuming
competitors.
valuations and multiples are as good as the public market,
Yeah, if you can raise billions of dollars in the private markets, why not stay private?
right? And some people are now suggesting that basically used to be that non-public companies were lower multiples. Now they might actually be higher multiples, at least
Yeah,
using liquidation
that's
preference.
obviously quite bubbly.
Yeah, right. But I mean,
but
that's
that
what
said,
I'm saying.
it's because they're not buying common stock. There's liquidation preferences.
Yes.
Sometimes there's warrants, so
Right.
you don't know what's going
Valuation
on.
in the private market not quite the same as in a public market. due
Yeah,
to
and there are definitely
liquidation.
founders who will take a larger headline valuation just to put a big number up to then attract
So they can
employees.
be a unicorn.
yeah. Well, it gives them supposedly an edge in hiring, but I would hope that any smart employee candidate would want to dig in on that.
Do you think that that's true? I don't.
Yeah, it's not. I mean, if you're an engineer joining a large company, it's highly unlikely they're going to give you the lick pref stack. They're
Or
gonna tell
even
you
know
all
what the hell you just said.
Yeah, the liquidation preference stack, like how much money they have to pay back to their investors before the common stock
Right.
can make a share.
I
make a
don't
dollar,
think
yeah.
that even most well-educated, thoughtful, smart people who work for startups, I don't think understand that at all. They're just like, oh, are they a unicorn?
Yeah.
Have they raised a lot of money? Great, I'm working for a company that's valued at over $1 billion. Yay.
Yeah, the problem is by the time it's a unicorn, firstly, you're only making money on the delta between it being a unicorn
Right.
and the exit. So that value is
That's
already
not
gone.
great.
Right. And then you have to pay back the investors probably several hundreds of millions of dollars before your stock's worth anything.
Right.
So in a downturn scenario, you can get hit really hard.
And so if there isn't a liquid market for common stock, or your CEO like Travis is absolutely adamant that none of that happens.
I mean, in the case of Uber, it's a little different in that they just generate gobs of cash flow.
Right.
I mean,
That
they
one's-
spend it
that one's
back into
probably
marketing,
fine.
but yeah.
So if I took a pool of unicorns in a particular vertical and I made an index bet on them, do you think that's a good bet?
It's a good question. I mean, on the one hand, you could argue the unicorns are, as a class, inflated. There's definitely been more price inflation in the later stage than
Right.
the early stage. Early stage valuations are probably up 1.5, so call it 50 to 100%. So almost double from when we started in 2006, 2007. But they've been relatively stable or even down from 2011, 2012.
Right.
It's the later stage valuations that have really accelerated. They're up 3x, 5x.
Right.
That said, I'm sure you've seen the stat. You add all the unicorns together and it's worth less than Facebook or worth less than Microsoft.
Right.
So that's kind of a counter way to look at it.
So-
if you add up Slack and Uber and
Right,
Lyft
right,
and
right.
Airbnb.
Well, I think my point was if you collected a pool of 10 food delivery startups,
Right.
7 might be overpriced,
Right.
2 might be correctly priced, and 1's probably underpriced, but you don't know which one.
yeah, if you collected 10 food delivery startups, you'd probably have 5% of the food delivery startups.
Yeah, right. I'm sorry. If you had 500 food delivery startups, hey, that's an interesting name for fun. Any particular?
You wanted a quote.
Hey, we have several food delivery startups, and we use a lot of their products.
I
And
mean, I
they're
love
very
them to
tasty.
death. Yeah, they're great companies, and I actually think some of them will turn out to be great investments.
I think, yeah, Yemex Peti in Turkey was just bought for, I think, close to $1 billion by Delivery Hero. I'm not sure if that was the, yeah, right.
Yeah.
People eat food. Yeah, that happens. So,
Yeah. I'm not sure
any
that counts as a real
particular-
exit, though. That's very incestuous.
Yeah.
Yeah.
Any particular verticals you think are overpriced? IoT, is IoT cool these days? What is IoT?
I think by the time you can call it a vertical, then sort of the early stage unicorn hunting opportunity is gone.
Yeah.
So I personally look for weird things.
Okay.
Every great company starts out as looking really strange to investors.
Yeah, I don't necessarily agree with that. I think food delivery startups and Uber didn't look weird to people. And they're
Uber
worth a lot
definitely
of
did.
money.
Uber definitely did. Because when Uber came along, I think most investors had a sense that we don't invest in stuff with offline or logistics or regulated.
I don't think they thought it was a big opportunity. Opinions on that have changed. But what I'm saying is I don't think that was hard to understand.
Yeah, not like technically difficult.
Yeah.
I still think like Bitcoin and cryptocurrencies are really interesting.
You
and they
were
require
always very
technical-
excited on that.
Yeah, they require a lot of technical sophistication. It's very hard to tell the good stuff from the
So-
bad stuff and what's going to work and what's hype.
Bitcoin as a currency kind of fell off a cliff in the last year.
Only relative to where it was.
Oh,
a year
yeah.
ago. Yeah.
That's called I was in early.
Yeah. Look, either it's a bubble or it's a crash. Take your pick. Right? Either
So
it's too early
did
or
you
too late.
buy Bitcoin?
No, I didn't make much money on it. I got in pretty
I didn't
late.
make much money on
You know,
it.
I got in like at the big peak, one of the peaks before the next peak before the
Okay.
crash. So
Virtual reality, hot or not? A lot of people spending money. Mark Zuckerberg's announcing something about Oculus today, right? Or somewhere.
I think long term, that kind of stuff is great. It's a good trend. I don't know if it's quite there yet.
Right.
It's a little like Google Glass, Apple Watch-ish.
Oh, I was just going to ask you, is Apple Watch the next Google Glass? I think you just told me.
I love Apple.
How many people in the audience have an Apple Watch? You nerds, you big nerds. Yeah. Is it good? Do you like it? It's really cool. Did you have Google Glass also? Yeah. All right. We'll check back on that one in another 6 months.
I buy every Apple product. I have them all. I love Apple.
Yes.
Bleed 6 colors and all that.
But is there a use case for your watch?
Yeah, the watch I put away after 4 days.
I mean, Fitbit's going public. Jeff is going to be excited.
Jeff's over there.
Going public very soon.
Fitbit's numbers are incredible. They're very
that I
well
believe
executed company. But I think what Fitbit shows is that there's a demand for sensors.
Yeah.
I'm not sure it shows the demand for a screen on your wrist that's sort of read-only, which is kind of where the watch is.
Yeah, because
right
that
now.
screen's so easy to read on my wrist.
Yeah, but it's very hard to write on it.
I was talking to somebody at the bar last night downstairs, like, I can send a heartbeat to my mom, watch, and it took like 16 different actions.
Yeah.
First of all, I was like, why is your mom going to care about that heartbeat?
No, mom,
maybe.
She'll panic. What's wrong?
Mom's a big nerd too, I guess. I think people think about syndicates as being the main thing that you do, but you have a lot of access to data, and the API is used by a lot of other people now. Actually, we use it, and much of people do. Is there interesting data analytics that you think are kind of useful tools or things to monetize in the future?
Yeah, we don't think of those as monetizing. Really, we're focused on syndicates and talent, and those are already one too many things to be focused on.
Got it.
I'm sure you tell all your startups to pick one thing and nail that.
I don't always listen to myself, but yes.
Right. It's interesting. As venture capitalists and investors, we give lots of advice that we ourselves do not follow. We don't build scalable processes. We don't, we don't write enough code. We don't, build a single.
You change your UI way too much, dude. Like really, way too fast. All right. And I use it every day, but I'm like, I still get lost sometimes. Like, what? Where did they put that shit?
We're just trying to keep you.
You're iterating quickly.
Yeah.
All right. They're going to give us 5 more minutes to prognosticate. We can take a few questions from the crowd. Here it is, right here. Ask the future of venture capital what you would like to know. The Palantir sees all. Yes, sir. Andy, go ahead. They're coming to you, but.
Is there anything you can talk about that you're doing to get institutional investors more involved in Angellist?
Yeah, so we have these funds that we launched. If you go to angel.co/funds, and those are really designed for accrediteds who want to invest in a lot of startups, and there's no management fee, carry-only funds. And if someone puts in, it's a minimum bite size of $25,000, we'll split it across 100 good companies for them, $250 each. So that's sort of the lowest ticket size you can use to get into blue chip angel
automatic
deals.
Indexing
Correct.
For some level of quality.
It is a filter. We probably pick about 1/3 of the deals on the platform that we think are good, and then we also get pro ratas and access to the private deals. And of course, that scales up at an institutional level. So we are talking to a number of institutions about investing through similar funds onto Angellist. We already have one fund, the Maiden Lane fund, that we raised right at the beginning.
Just going to ask, that's a separate vehicle? Or
it's a separate vehicle co-managed with Atlas Ventures and their LPs, and it backs deals on Angellist. But we have a lot more of that kind of thing coming.
So Maiden Lane puts a couple $100,000 into individual syndicates deals?
Into deals, yeah.
Okay.
The nature of these online markets is they often start with smaller investors like Prosper and Lending Club did, and they grow up to being more institutional capital. And I think now we sort of have the track record, we have the deal flow, we have the volume, we have the signals, and we have the tools to allow institutions to start investing. Right. Institutions are obviously more risk averse, but we have many individuals from family offices, many overseas, who will routinely invest large sums into individual deals on Angellist.
So I forgot to ask you that question. Sorry, are you seeing international, not just Silicon Valley and New York, you're seeing international money come in to back those syndicates?
Absolutely. It actually tends to happen from international VCs or family offices. So a lot of times in overseas, VCs and LPs are sort of the same thing. The GPs and LPs are the same people. So it'll be a scion from a wealthy family who starts a local venture capital fund. And then when they get on Angellist, they realize, oh, I have global reach. I don't just have to invest in my local companies. So we're definitely seeing a lot of that activity. Now there's regulatory issues with depending on what jurisdiction you accept from. There's banking issues. How do you wire money, hold money, return money? There's tax reporting issues. So it does get really complex.
You guys must be building a large back office, or at least have someone handling a lot of back office for you.
We have 3 people working on it.
3 people? Those are 3 very busy people.
And a bunch of engineers writing code.
Okay.
So, yeah.
Scale that shit. That would be great.
Scale, write code, build product. VCs should build product.
Other questions? We have one there.
Yes, hi, Naval. I want to hear your opinion about a lot of the copycats of Angellist. This year, I have at least...
Copycats on Angellist or copycats of Angellist?
No, of Angellist from China. This year, I have at least 4 friends who are the owner of these copycats, and they all come to here and all ask me to connect to you. So you should thank me. I didn't pipeline to your dating
They want to be
schedule.
connected to Naval so they could copy better.
So what do you think that the kind of copycats, and they all want to do some kind of collaboration with you?
Yeah, good luck
what
to
do you
them.
think?
I'm always amazed by the people who want to copy shit and then partner with you. Like, hey, I'm copying your stuff. Can I partner with you? And you're like,
I think the Somewheres pioneered that with Rocket, and
so that's not a partnering that I would like to.
There is a copycat culture in many parts of the world. I don't begrudge it because it sort of seems obvious. I would say Angellist is kind of a stupid business to copy, because it's so difficult to build, and it's like a combination of product and service, and it requires a lot of local network and knowledge.
This is interesting. I've got an amazing business, but you shouldn't copy it because
it's
it's really hard.
Business. I don't make any money. It took us 5 years to get where we are.
I agree.
And it'll probably take another 5 to get to a reasonable outcome. So I mean, go copy something that's obviously working and scaled. Or go do something creative if that's your bent. I think in Silicon Valley, one of the reasons we get bent out of shape over these copycats is because we think of ourselves as makers and creators. And over there, they're thinking of it as business. So
I think
we
there's
overlap.
a little bit too much narcissism here about how we're the originators of ideas. I was the very first person to come up with this idea.
And part of it is necessity. We have to come up with new stuff because the old stuff is already done. That ground is occupied.
Right.
But overseas, that is the fallow opportunity. But by the way, I've been hearing about Chinese copycats since the day we started 5 years ago. And as far as I can tell, none of them have gotten any traction whatsoever. And I can tell you it's so brutally difficult to do what we do in Silicon Valley, which is sort of the center of the tech industry for the moment, that I don't even understand why you would do it in a different market and in a highly competitive environment. They must really be low on ideas to be doing this one. Yeah.
Well, there's a lot of startups in China.
Anyway, I have no interest
financed.
in partnering because it's a distraction. Partnership's the death of small companies.
Yeah. Do not ask Naval to have a coffee meeting. It will not happen.
Well, that's why we have an API. We do our partnership is there's an API.
There
and
you go.
If you
That's the coffee meeting.
Yeah, and if you want to do a partnership that's not can't be done by the API, then ask for an extension to the API.
Right. We're going to talk to somebody running a syndicate up next. You have 10 syndicates that are over $1 million right now. I know we're one of them, but
yeah, something in that range.
But Gil and a few other folks, Dave Moore and Jason Kalkanis, are all running huge syndicates. Tim Ferriss as well.
Right. Kevin Rose, Elad Gil, myself.
Indeed.
Right.
How often do those folks run those syndicates?
It completely varies. Some of them will do 1 deal a year. Some of them will do 20 deals in a year.
Okay.
Arena Ventures, which is Paige, Craig, and Jeff Lowe's fund,
Right.
they raised a fund.
Maybe here too.
Yeah, and they're putting every single deal that they do, or pretty much every deal, on syndicates.
And Brad was doing,
Brad
I think,
Feld, FG Angels.
30, 40,
deals
maybe
a year.
even more per
That's
year.
right.
Almost. He
Yeah.
said he was trying to do 1 per week, right?
Yeah, it's blistering pace.
Pretty amazing.
A lot of
All right. Well, I hope this little experiment of yours works.
I hope all of our little experiments work. The world needs it.
Very good.
So
Thanks for spending some time with us.
Yeah,
Naval.
thanks for having me. Thanks for showing up so early in the morning.